Hey guys, Crypto Sniper here. Yep, just another update on the mysteries of Bitcoin and how, where and why it might be doing whatever it's doing. A couple of key points, and I thought I'd just start with a super clean chart and just do a couple of very simple things. And this is what I'm looking to achieve here today. Give a very short and simple idea of where we're at. So first of all, if I just take a fatter line and we go with a square, there's a couple of key levels that I want to illustrate. So we go from around here which is your 40,000 mark down to your 30,000 mark. You can see this box just a bit above 29.5, finishing just above 39.5. This is a key box range. Couple of core points on that. First of all, we made we had a neckline at about 47.5. We have another working neckline just above this at 42.5. So let's just highlight those little marks there. 42 you got there. Let's go with a line. There's a possible scenario here where that might be a right shoulder, and we've discussed this in fair amount of detail. So there's other levels of interest. And 42 has been a bedevilment of this particular structure because we've only really been able to do a little bit of icebergs above the waterline on a very limited level above that 42 point, and a dot there. Let's run it through there. You can see the resistance, first pullback and support. But back to the structure, the orange box structure. Why is that relevant? Well, once you moved up to these levels through the 40K, you had a pullback, falling wedge. You supported in here and then you went higher. A very hardcore head and shoulder sell-off. Again, strong sell-off into here, strong sell-off into here, sell-off, 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 final PP down, and then a very big snapback rally. And of course here you also accelerated. When we had a rest after this move, you came back, supported on the box, supported on the box. When this right shoulder started to roll over and came to the neckline, just ran the next line, supported on the box, a little bit of a re-rally. Then that hard deep dive into the box. It's not the first time because I'm highlighting two previous occasions, one and this entire zone where there was multiple attempts to run the low end of the box, but you were certainly in the box zone. So what we essentially have is this. Change that to red and maybe a thinner line now. In principle, you have what we refer to as a basing ascending grind line. Pop over to the Market Sniper, visit the site, and you can book a call from there if you like what you see. We do interview everyone and we don't take everybody, I'm afraid. But that point aside, basing ascending grind line, it's part of our theory. What's gone on in here? So this is a concern for us because in this instance, all the selling occurred across the top and there was grinding lower lows along the bottom. That gave you a falling wedge. Generally, you break to the upside. It's still a probability assessment, but generally you break to the upside. Similarly here, this was a smaller version of a falling wedge, by the way, so it wasn't the first of all of them, but it provided a falling wedge with a bump to the other side. Lots of money buying the dip. That's also reflected in what I describe as the hammers. Lots of lower wicks here, there, as indicators of the dip being bought. So we're going to come back to that very point when we deal with it. In the meantime, this has been very, very volatile. Typically, for upside three impulse structures, you have potentially a very steep, let's choose a different color, shall we, to draw. We'll use some of this lovely space. We'll go with a gray. You can have a very steep up leg and quite a steep down leg. Then you start to do a slightly flatter second. It starts to take more time, moderate down, decent up, and then even more chilled. This is a compression of volatility, and that can typically realize in continuation. When you get structures where you start like that and then the volatility actually increases, they go up and down faster, even though there's compression, the time gestation between the shoot up and the plunge back down keeps getting almost shorter. That is actually quite thrashy. So while in argument you are getting lower highs, so you can argue that there is compression, and you are getting higher lows, the range is reducing. It is thrashing around in that reducing range, kind of like a ping pong ball when you trap it under the bat. It gets harder and faster. The space it's got to move in is reduced, but it really zips in and out. You're actually getting what feels like an increase in kinetic energy over there. And in essence, this is what's happening. The more thrashy the structure it is, the more it's a concern. It's generally more bearish when it does that. Whether it's coming from a downside into the structure like that, or whether it's coming up from up and below. In this instance, we are coming from a down. So I should rub those lines out. I've ended up rubbing a lot out, but that's okay. I think you get the message of what we're saying. So this is kind of the ping pong ball in the trapped under the bat concept that is occurring. That has a cranky kind of energy. Why would that be? Well, it's sitting kind of submerged. It's a floater. Part in the support, which has proven to be significant support. So that's why you've also, in terms of range, how you've performed, it must have been, it's watching paint dry with occasional schizophrenic moments in terms of Bitcoin price behavior recently, and I think it's made a lot of people pretty cranky and nervous, judging by the comment section. Either that or we got a lot of new enemies. But anyway, the point is the range has been from 46 down to about 34 and tightened in that, and it's got really, really tight. Now coming into that, you were actually in a bear. Not a bear, I don't want to use bear in bull market, you were in a sell-off period, generally. Generally this has been coming in over down. Most of the YouTubes we've done, we've been saying bearish things. But we've also pointed, because we watch momentum, as and when these key moments come, not through FOMO, but if you get a real sign of selling exhaustion and you get real power on the upside, we go, we need to break the 42, hold above the 42, squeeze, and then go for the bull mark, but it's possible, there's a pivot. In both instances that this has occurred, you've smashed really hard back down, ever quicker. This is the thrashing element, the cranky element that we've highlighted. Even here, again, very sharp up. We're saying, okay, this could be possibly an inflection point for upside. The only way you take that back is you come back equally fast down. And that's what happened in both these impulses cases. You came equally fast back down. And that now, after 3 impulses, has been 2 tricks of pretending to run, turning around and falling right the way back with a similar amount of zeal. So overall, it's my assessment that there is a real lean going on, and a lot of volume should be shown to be occurring on the lower side of this price structure. So if we drop a time frame, and I'm going to wave goodbye to the 64 high, and we're going to even potentially lose the 69 high, and have a look at this structure over here. And I want you to remember the 40 to the 30 range box. This is what we're asking. Can this be broken to the downside? We are submerged in it, and we are being, the sellers are being reducing the bid stack in the support zone. So we should see evidence that in actual fact we are leaning over and knocking on the floor looking for the trap door, as opposed to poking the ceiling with the broomstick looking to find the ceiling loft to break through to the upside. What does volume by price? There's 2 things that will help you when you are wondering about the direction of a market, and these are the kind of messages we give to our premium community as well. So you're going to get a little clue here, so sit up and listen. What does the volume by price do? What does the volatility say? Thrashy volatility. And then the third item, which is in there, is what does the big time frame candle wicks say? So we will, before we drop and just look at this particular pattern under question, you've got to understand the macro area of where you are. Essentially, this is all been a down, There are a number of scenarios for bearishness, including this being a head and shoulder, which unfortunately for some people, if it were to perform and if it were the scenario, not what we are saying, we're just talking about a break to the downside right now and a pattern, a small pattern that can make a target. But if that were to knock on and follow through, you've got targets around the 15K level. Details and specifics in our community with regards to that. So what is the big time frames when you look at them on the wicks say? I often say to people, when you want directional feel and you're a little bit uncertain on direction, is this up, is this down, volume by price, volatility, and big time frame for the wicks. So there we go. We click on the weekly first of all. And by the way, Wick analysis gave us this high when no one else believed it was high. Everyone was calling all-time highs, all-time highs. We pointed to the shooting star, then the reflection back, the rejection candle, and the rejection wicks there. And then we ended up with a structure. Basing ascending grind line, first in a new trend, and you lost ground all the way. Eventually, actually, there was a move down there. But even if you just looked at it from a perspective of up down to here, you're talking about something that was knocking on the door of 14K that ended up trading close to 6K. So you didn't have to take that dip if you were at 13.5. You didn't even have to take it at 12 or 11. You could have saved yourself going to 6K and got back in earlier. Anyway, so what does the Wick analysis say here? So of three things that we've given you for directional, getting additional insight on directional bias. What are you getting? Well, in the previous two examples where I laid down the orange box for you, so maybe we can slip that one back on again for you, in a reasonable width as well. There was something like that, 30 to 40. I've maybe run the 40 a little bit low. Let's do it again. So 30 to 40. What did you get in the previous events? Well, if you understand that that box is there, let's take it off now and put on these. Hammering wicks, smaller on the top. This is still larger on the bottom than that. That was higher on the top, but it was a green candle and you got rejection and you started to take out. We've spoken of the falling wedge. What happened after the head and shoulder structure? Rejection there. You did also get a rally up, but this was very early after nasty selling. So there was a lot of people that didn't want to sell the bottom that got out. But after that, rejection wick, major hammer with a huge rejection. And then most of the wicks were to the downside, the length. Down, hammer. This was neither here nor there, but it's still larger to the downside. Beautiful rejection, and look one way, go the other way candle. By the takeout of the top of the previous candle, lots of hammer rejections. In fact, if there's only one noteworthy upside wick, and I should have done it in another color, so I'll do it now, and that was that one. And that came straight after your first major snap rally. Wick analysis was suggesting that while the bodies were sagging into the low, there clearly was buying forces coming in here. And buying this on the way up, buying it on the way up, buying it on the way up. While the bodies seeped down in general, there was dip buyers. All day long there were dip buyers. And then you took it out and you went to a new highs. What do the wicks say now? Well, you have two hammers, so we'll do them in blue. Immediately after a major sell-off, let's grab the square instead, you've got a kind of hammer here. Body's a little bit big for a classic hammer, but there's a main wick to the downside, we'll call it. And you've got a sort of hammer here, although it had quite a tall upper wick, there's still more on the dominant side to the underside there. So these were sympathetic to some degree of reversal of the dominant downside that brought you into here. Note how you got a great wick there, it bought you a rally, and that gave you nothing more than a continuation pattern. That is why we always put current trend ahead of a single candle, even on a big time frame. Yeah. So what did we subsequently get on the bearish side? Well, let's just go with orange so it's slightly different and go back to our squares. You've got a shooting star there, quite clear, small body, very small wick, bigger upper wick. Rejection at that point, down, down, down. You've then got your hammer, that gets cancelled. So this hammer gets cancelled. Your range has been defined by the shooting star. So yes, it got you up to there, and then it got taken over and taken back. You've tried again. This time it's been quicker, and this is part of that thrashiness I'm highlighting, and it's a far more vicious looking reversal. All of this is wick. You couldn't have a body at this elevation. Your body's way down here. Way down here. We'll come back to that when we do volume by price. What has happened subsequently again? Another vicious up, vicious down, giving you another, call it shooting star. It's not the traditional context of a shooting star. Ideally, those should be at localized highs like there. That's kind of the right place for a good shooting star. Body a little bit big there. But it's intra-period reversals, given that this is a week. That means every time we're coming to a Friday, what's the day today? Friday. We're coming into selling. People don't want to hold this over the weekend. So the weekly take coming into the Friday is this, my impression that I'm getting for now. Whilst these events over here were well supported, and let's go back, green candles, green arrows. These events were well supported in the orange box to the upside with follow through. That this is going to be different to the previous two events. Can we be wrong? Absolutely. There's a directional call going on. I've given you two reasons why I'm biasing to the short. Thrashiness, even though you're getting lower highs and higher lows, it is very, very cranky in the manner it's being done. Very short time frames, isosceles triangles almost, long sides that are equivalent like that, and very short time frames. Those are your angles and those are your equal length up and downers. And where is this base price level? For that, we want to go to the volume by price. So I'm going to drop a time frame and we're going to say goodbye to that. And this is what we're looking to give you as guidance here. So now we're focusing purely on the pattern structure. Clearly, it is being held here. There's been a lot of price behavior. I'm guessing the volume by prices. There's two ways to do volume by price. I'm going to do it bullish for the hope of the upside and see how the volume by price helps validate that view. So that I take it from the high point through to current price behavior, where that is my first upside inflection, that is my first lower inflection back up, etc. So I have 3 inflection points across the top and 3 along the bottom. What am I getting? Well, actually, I'm seeing that the bulk of the volume is low and heavy to the low side. So let's do something a little bit more brighter. Here are your key levels. Right here. Point of control, that's that bold red line that the volume by price puts on, is actually sub 39 or on the 39 level. There's 39.2, for example. So you are on the low side. Don't forget the range here is right up through 45. The last low here is 37. You're a lot closer to your low than you are to your last high. Actually, that's not true. That's your last high. But you are a lot closer, but I was just choosing the wrong last high. So we're treating that as third high, second high, first high. First low, second low, for example. We'll go back for the bearish case and we'll use this one. This one we're looking at the bullish case. We're looking for a third low. Where is the point of control? It's knocking more on the floor if you have to choose one of the ranges. The bulk of the activity is on the floor, not on the ceiling. It does not strike me as a broomstick for the ceiling. It strikes me as trapdoor searching. That is where your volume is. I would argue you've got probably close to 50% of all volume inside of that box range. The total of 70% goes from here. And actually, when you're going up, there's voids and vacuums. We teach about this. There's a very thin volume for going up and down through this area. This is easy covered ground, and you start to get heavier. So now it's time to draw key levels of significance as well. And we talk about those as straight lines, and that is on the couple of interesting levels. One is the 40K. Let's do it in a different color. Yep. So sub 40K to roughly around 38, I would guess, 37.7, that's 38 probably. Sub 40 to 38, 38 to 40 is very dense. That's this range. The only other place you have a little bit of volume, it's outside your 70%, is at the 44. So the sellers are coming in to sell these highs all day long. It's not taking much volume, and they are being toppled all the way back down. There is also a small spike after a bit of a vacuum at the 42, 42 and a half. Now remember, that's a neckline for our head and shoulder. 42 and a half is a neckline for a head and shoulder. So you've got a neckline for a head and shoulder that's going off through there on that 69 peak high that we've already highlighted to you. You're getting a small cluster of interaction at that level. You can see how you dip below it, you come back into it, you go just above it, you support on it, and then you spill with momentum down. So a little bit of churn there, and a little bit on the 44 round number over there. That's where your volume is on your bull jaw, taking all the recent volume by price since the 10th of Feb to this point at this exchange now. So where is Bitcoin sitting generally, heavily in? The 38 to 40K range. And this smells like a lean on the floor for a dip lower potentially. Could we be wrong? Absolutely we can. Volume by price for the upside does not look supportive for tapping away at the ceiling, thinning out the ask of the ladder by regular bid visits, thinning it out till eventually they blast through it because there's not the same depth in the ask ladder. It actually looks like we're thinning out the defense of support with the regular visits to the downside. So let's have a look at the volume by price slightly differently and just treat it as if it was a bear jaw and we thinking it's a bear jaw instead of hoping it's a long. So if we put it through there from that low, then we already have our three lows in existence. There's its high, we swing each way 3 times, and you've got it like that, for example. Let's assume we take that as our third high and you come back down. Where's that locus of control? Well, it's only slipped a little lower. And in actual fact, that bar has only just overtaken this one. So the point of control was until recently a little bit lower. But all of these are very, very similar. Why? Because we are currently trading at that range. So we're stacking these shelves, these horizontal histogram shelves with price volume. So this is being boosted immensely. And that is a big area. And in actual fact, even there's a fairly reasonable sized one along the lows here, which caught this price behavior, that price behavior dip, and a little bit of that and that dip. So you've got a tiny bit of a biggie there as well. Before we go super low, and then again the 42, it shouldn't be a shock, again a void, and then the 44. So that is your volume by price, super low on the wicks for now, because currently we're being bidded up fairly easily out of those levels. It gets into the thicker weather over here. Again, in terms of the range that's been determined, 46,000, even if I include the absolute low down here at 33, this is precarious in terms of this overall structure. This 33 was put in on a major final spill and lows. Most of the recent price behavior is over here, from that low up to that high, and we can even bring it down to capture that. And you are at point of control here. Again, closer to all recent price behavior since February started, the first week of February to today. So again, heaviness. That is where it sags. That is where it lags. That is where lots of people are prepared to exchange, getting in, getting out. There's a mutual agreement about value for buyers and acceptance of level of price for sellers at that range. There's a lot of interactivity there. There's a lot of validity. A lot of people will see that as their point. So overall, this looks like it has a potential sub 27K run to it. You can get actual chart and targets out of our premium community. But this is 3 key things, just to recap what we've shown you today, why we think the Bitcoin chart could more likely be a downside break. Increased speed of volatility up and down despite some compression, volume by price to the low side, macro wicks to the high side showing rejection. Okay, there's one or two, when you do 360-degree analysis, there's one other thing that bears in mind. This is all about Bitcoin US dollar. So what is the dollar doing? Well, we actually have upside expectations for the dollar. So I'm going to take you down just to the other half of the trading pair, because when you're trading Bitcoin, you are actually trading a pair. And many people forget that. They think it's all about crypto and it's all about the crypto bubble. Macro never comes into anything they think of. And there is real concern there. The dollar has reverted back up. In fact, we still have a inverted target outstanding, which is yet to be run at 99.8. We're thinking 100 will fall. You did get a rejection because there was a legacy funnel in here, so that's that red and green line for the downside break. That was the 7 trillion proliferation that weakened crypto. We actually think that the dollar index is in a breakout. We think it has already turned and had its third high and third low on a much bigger time frame. This is daily. You can go and look at our previous videos where we've done grand macro on the dollar index. I'm not going to do the deep dive here. But this is up here, and that is probably, in our opinion, a breakout to the upside. It looks very similar, and for those of you that want to see it on a different, it looks very similar to the USD DKK, the Danish kroner peg to the euro, a peg that I think will probably come undone as part of the macro financial shenanigans. But beautiful break up, a revisit to our funnel level and up, and that is that structure, which you'll see looks very similar to the dollar index, USD DKK. A smaller currency is the base currency is the USD, and the term currency is the Danish kroner, pegged to the euro. So that is what the upside down euro, or the euro USD chart looks like as USD euro. And that for us is a squeeze to the upside, and we think you've probably done enough here to justify suspicion that that is a break, kind of impulsive. So what that means is further upside potential for the dollar. Further upside potential for the dollar. So how does that euro USD look like? This brings you into other markets that we've been calling. You're a crypto guy and you think, I don't need to know this. Well, actually you do, because if you're interested in whether Bitcoin goes up, if the dollar is going to be strong, it might have a material effect on whether Bitcoin goes up quite as well as you hoped it would, or whether in actual fact it could in fact go down. So this entire head and shoulder structures, you can see now volume on Forex, it's a proxy, you don't get true volume, but it's quite interesting to see up to the neckline and above where all the shoulders form. It was absolutely a neckline, a major fall away. We chose the correct neckline when we modeled for this. We said you wanted to get short on the right shoulder. You made that target. A return move to our basing descending Rhine line and a spill back down. Likely further downside. If that's all you get in your rally post target run, could be it. It can point to further downside for the euro against that. How's the euro against something that isn't the dollar, for example? Just to see, is this just weakness on account of the dollar being strong? Well, let's have a look at the euro Swiss franc. Very similar thing, also covered in our content. Ran the parity, which we predicted, traded below the parity, also return move to the same structural line. That was our continuation pattern broadening structure. So that should give you an idea that, yeah, look, it could turn and go again. It's looking pretty sick in the similar basis against the euro, but the euro cannot be relied on to be strong in our view and would likely continue to be weak in spite of the fact that targets have normally been reached. That's when we expect a bit of pushback. But how much pushback will you get? Who's to say? I don't have a means for measuring something like that. And I would bias on an ongoing macro basis, dollar strength. And even in light of recent events, I would argue short term there could still be possibilities of some of that dollar strength coming. That doesn't mean I'm a dollar fan. It doesn't mean I'm a banker fan. I don't like any fiat currencies. In the game where you have to consider the two, that's where I'd be. The dollar's also been pretty ordinary against commodity currencies like the Canadian dollar, the Aussie dollar. So, and even the Chinese yuan. Okay, so that's a little bit on the currency. If the currency is going to be a bit firm and has been recently, it's putting a lean on Bitcoin, because Bitcoin now is requested not only to go up in an environment where it's looking very heavy and is hanging hard and deep into support. It now has to go up into, it has to swim up against a tide of strengthening strong dollar, where we still have 100 outstanding for strength on the dollar, which I've already touched on. So if the dollar is to be strong, that's going to be very adverse for Bitcoin. There are one or two other things that you can have a look at. We've failed to make a new high on the Bitcoin dominance. So we could see dominance down. Many will say, well, if dominance is coming down, it usually means the alts are running. Well, Bitcoin has been rather strong and alts have been bleeding out a little bit. They've been heavy during this period. But and actually Bitcoin's been reasonably range bound and hanging tough. A rollover could mean that pattern has triggered. By the way, the totals also, total 3, total 2. The best for downside is actually total 1 because of the Bitcoin's involvement. So it could be a tough time for Bitcoin. And unfortunately, what's tough for Bitcoin is likely to have repercussions for the other tokens. But maybe they've taken a larger beating. For once, there might not be higher beta, and as a result, that dominance drips off, or we see dominance reverse and go back up. Okay, that's my take on that. As I say, most of the time we've been broadly bearish. We have taken note of sudden momentum to the upside. It gets cancelled if you get sudden violent momentum back to the downside. So what was positive about that becomes negative. A, it's cancelled, and B, the more recent price behavior holds dominance. Then you had quite a strong upside again, and that literally got taken back. This is very, very heavy pulling around this level of volume, that volume. And it's what happens here with a slight ascent. That is exhaustive on the Bitcoin dip buyers because they keep trying to chase it up, and it's clawing its way higher at the main levels. These excursions to the upside are on quite thin volume and are usually reversed. So it's actually what's going on in that channel range that is having the most significant effect. So you could in fact be looking at some form of bear flag structure where this is just an eccentric excursion on a roundabout chip. 44 has not been held. 42.5 has only been a very high waterline that's rarely passed by any great deal and was a point of rejection at the third event. So it's what's happening here. I'll take Bitcoin to the bear side. Okay, thanks for watching. We appreciate your shares. Those are truly appreciated. You tell us, is it up, is it down? What's going to happen on crypto? What's your view? What are your reasons why? And what would be the driver? What's the narrative going to be? We had Biden appoint a number of committees of inquiry around how crypto should be handled. They know it's always been captured. They're always intended to capture crypto. In fact, it was probably captured from the beginning. And you're just now being told about it as they're reining it slowly back into the real world. They will never let you have your own money, guys. Okay, until next time, I'm interested in your comments. Do share and write them up. Which way does Bitcoin go? Why? And what's the reason going to be? Tell us your answers on those concepts. And if you are thinking about how you're going to establish your wealth and trading and how you intend to defend that in reset times, you may find value in visiting our website, and an option to book a call is there. Bye for now.